All right, hello, and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James. And before we get into today's podcast, just a quick disclaimer, nothing in this podcast or any of our other materials should be taken as investment advice. James and I could have positions in any of the stocks we may mention in this podcast, and we reserve the right to change those positions at any time. So make sure to always do your own work and consult with a professional before making any investment decision. With that being said, the topic of today's podcast is going to be a company called Destiny Tech 100. So Destiny Tech 100 is maybe a little bit different than some of the other stocks we've mentioned on this podcast before. Basically, what they do is they're a publicly traded closed-ended fund that invests in high-growth private companies, kind of innovative companies that are kind of household names among the general public, companies like SpaceX, OpenAI, and others. And the idea is that this allows a way for public market investors, right, just ordinary investors, to gain exposure to these innovative private companies by buying shares in this publicly traded closed-ended fund. Now, taking a look at the Destiny 100's portfolio of companies and their performance within the private markets, if you take a look at this chart, which is from Destiny Tech 100's own materials, in the blue, you have the benchmark that they benchmark themselves against, which is the NASDAQ composite. And in the black line is their own net asset value as valued by their own methods of valuing their private company portfolio companies. And so since 2022, you can see that their portfolio's NAV has declined, while at the same time, their benchmark, the NASDAQ composite, has increased massively. And so actually, kind of contrary to maybe some people's perception that investing in private market innovative tech companies is a great way to invest and get outsized returns, in the case of Destiny Tech 100, their private market valuations of their portfolio companies have massively underperformed the NASDAQ composite by about 100 percentage points over the course of the past 2 to 3 years, which is obviously pretty disastrous. Now, another thing to look at when looking at closed-ended funds like Destiny Tech 100 is the trading price of their publicly traded securities versus their NAV. And so as of Q4 of 2024, their net asset value per share was about $6.44. Compare that to their current trading price today of over $30 per share, and you get them trading at a premium of 370%, which is pretty massive, obviously. Now, it's important to note that closed-ended funds are nothing new. In fact, there are many closed-ended funds that have existed for a long time, and they almost always trade at a fairly sizable discount to NAV, not a premium. And the main reason for this is that these closed-ended funds carry pretty significant fees normally in the anywhere from 1 to 10 or even more percent of NAV. Even closed-ended funds managed by superstar household name investors like Bill Ackman or Third Point normally trade at pretty sizable discounts to NAV. Destiny Tech 100, as I mentioned earlier, trades at a massive premium to NAV. Now that can maybe be explained by the fact that this is the only way that investors have to invest to get exposure to private companies like OpenAI or SpaceX. And so maybe that explains why investors are willing to trade up to buy up the stock price to such a high premium. But it's important to have the perspective that closed-ended funds normally trade at a discount, not a premium. And so with that being said, I'll kick it over to you, James, to discuss what is actually going on with this massive premium.
Yeah, thank you. And before we get onto that, just a quick reminder to anybody who does not already know, we have a website called differentiatedanalytics.com where we provide, among other things, premium short selling research. So we identify our most compelling short selling ideas, companies that we believe to be fraudulent or overvalued, and then we write detailed short reports explaining our bear thesis. And this chart shows the green line is the performance of the S&P 500, and then the blue line is the average performance, the average monthly performance of the companies that we've written up as shorts since we began at the beginning of 2024. And as you can see, our portfolio, our hypothetical portfolio of all of the stocks that we have targeted with our short reports has massively underperformed the S&P 500, which is as we intended. So we're very happy with the performance of our short selling research so far. So if you're at all interested in short selling and accessing our premium research, make sure to go to differentiatedanalytics.com. The link is in the description below. Also, if you join as a premium member, you also get access to our private Discord channel where we discuss stocks, and you can also recommend video ideas. And finally, for a limited time, if you use the promo code WSM50 at checkout, you will get 50% off the cost of the subscription. So again, go to differentiatedanalytics.com. The link is in the description below. So now back to the video. So as Ryan explained, there's this Destiny Tech 100. The ticker symbol is DXYZ, has traded at a massive premium to NAV. And so the NAV it started around $5, and as of today, it's increased to about $6. But the NAV is about $5 to $6 per share. The fund DXYZ listed its shares on the New York Stock Exchange in the spring of 2024. Now, when they first listed their shares, there was immediately a huge hype from retail investors, and then the share price surged almost to $100. So at that point, it was a roughly 20 times premium to NAV. Now, this was clearly ridiculous, and then the price quickly dropped back down to about the $15 range. And then throughout most of 2024, it kind of ranged in the $10 to $15 range, which is still a premium to NAV, but not a massive premium, maybe 2 to 3 times NAV. Then in November, we have the election of Donald Trump. This creates, a lot of euphoria in sort of the speculative areas of the market. And also the election of Donald Trump, as we'll get into shortly, the election of Donald Trump led to the perception amongst a lot of investors that Tesla and SpaceX will somehow benefit from the Trump administration, given Elon Musk's close relationship to Trump. And as we'll talk about shortly, Destiny Tech 100 is a major shareholder in SpaceX. In fact, SpaceX is their largest position by far. So DXYZ was perceived to benefit from the Trump election because of its holdings in SpaceX. So this created a lot more hype around DXYZ, and then its share price again surged all the way up to $70, and it's come back down now. But even as we record this video, its price is $30, which is a massive premium to NAV. But here is a chart showing their net asset value per share. So every half year, they release a report where they explain their net asset value. And the net asset value is based on the value of the private companies that they own in their portfolio. And because there's no liquid trading market for these private companies, the valuations are typically based on whatever is the most recent funding round. So basically what Destiny Tech 100 does is they have to monitor for each one of their positions, look at what is the most recent funding valuation, the most recent funding round, and they take that valuation to calculate their NAV. And one thing that is very interesting about Destiny Tech 100 is, so they initially did their IPO early 2024, and they raised about, at the time, the value of the fund was about $50 million. But they trade at a massive premium to NAV, right? So given that the fund trades at a massive premium to NAV, what you would expect them to do is to issue new shares, which they can issue at the market prices, taking advantage of the premium, and then using those proceeds to buy more stakes in private companies. that will, by issuing new shares, raising more capital, and then deploying that capital into the private markets, that would increase their NAV. And why would they want to increase their NAV? Well, they charge fees. So they charge a 2.5% management fee. And that management fee is based upon the value of their NAV, not the market value. So the fact that they trade at a massive premium to NAV and their market cap is very high, well, the management of DXYZ, they don't even benefit from that directly because the fee is based on the number of assets under management. So they should want to increase their NAV by issuing new shares. And that's why in April, very shortly after they went public, they announced a shelf offering authorizing them to raise up to $1 billion of additional cash by issuing new shares. Now, that seems logical, right? They want to issue more shares, raise more capital, increase their NAV, thereby increasing their management fees. However, we're now more than a year later from when they registered this shelf offering. Yet, to date, they have not yet utilized it. They have not yet issued any new shares. So that is very surprising, why they have not yet done this, why they have not yet started issuing new shares. And to be completely honest, I do not have a good explanation of why they haven't, because all of the incentives seem to be pointing towards them wanting to issue more shares and increase their NAV. But this has not yet happened. So we'll have to monitor this very carefully. But that's just something that I found curious. So as I explained earlier, the DXYZ's portfolio has increased in value throughout 2024. So here we're going to disaggregate, looking at their positions, where those gains have come from. So these two charts show their top 10 largest holdings. And the first chart on the left shows the percentage change in value throughout 2024. And the chart on the right shows the dollar change in value. So here we can see that as in percentage terms, their single biggest winner was Revolut, and that increased by 250 some percent throughout 2024. However, this was starting from a much smaller base. So the dollar gain was only 5 million. So it increased a large percentage from a small base. Their biggest dollar gainer was SpaceX. So the value of SpaceX increased by 100% throughout 2024. And that, because SpaceX was already a very large position for them, and then it doubled, they actually had $18.4 million of gains from SpaceX. And that is their single largest gain by far. In fact, the dollar gain for their entire portfolio was only $17.4 million. So all of their gain came from SpaceX, and actually the rest of the portfolio declined in value on average, although you also have to consider the management fees. But approximately, they had this massive gain from SpaceX, and then the rest of their portfolio either was flat or actually declined slightly. So SpaceX is hugely important to DXYZ. It's their biggest position and was their biggest outperformer by far in 2024. So as of the end of 2023, SpaceX represented 35% of their portfolio. Then as the value of SpaceX increased, it now represents 53% of their portfolio. So there's been a massive increase. The majority of their portfolio is now in just this one position, SpaceX. So why did SpaceX valuation increase so much throughout 2024? Well, the main reason was the election of Donald Trump. So you can see that after the election in November, DXYZ's share price surged. That also coincides with shortly after the election, SpaceX did a private funding round that had its valuation massively increase. And the reason why SpaceX's private market valuation increased is because there's a lot of optimism because of Elon Musk's close relationship to Donald Trump, that somehow Donald Trump will give SpaceX favorable contracts and that will benefit SpaceX financially. Now, that's the theory. That same theory people also had about Tesla. If you look at a chart of Tesla's stock price following the election, Tesla stock, massively surged because people thought that Trump is somehow going to benefit Tesla. It turns out Trump is not benefiting Tesla at all, and it's actually causing brand reputation for Tesla. So Tesla's stock has tanked and has given up all of the post-election gains. Now, the situation with SpaceX might be slightly different because unlike Tesla, SpaceX is actually a government contractor. They get a lot of their revenue from NASA and from the military. So theoretically, Trump could give favorable contracts to SpaceX, basically to help out his friend Elon Musk. Now, so maybe there is a real rationale of why the valuation of SpaceX should increase following the election. And obviously, as a major holder of SpaceX shares, DXYZ has benefited as well. But let's look at the actual numbers to see if this is at all reasonable. So currently, SpaceX's private market valuation is $350 billion. So this is, after the Trump bump. So, following all the excitement around the Trump election, SpaceX's valuation has increased up to $35 billion. DXYZ currently owns approximately 0.01% of SpaceX's equity. So DXYZ currently has a market capitalization of $326 million. That's their, the trading price of DXYZ stock on the New York Stock Exchange, the $30 per share. That gives the company that gives DXYZ a valuation of $32.6 million. Of that valuation, 53% of it is related to SpaceX, because 53% of DXYZ's entire portfolio is SpaceX. So if we take 53% of the $326 million, that means that on the public markets, DXYZ's stake in SpaceX is valued at $173 million. So they own 0.1%. They own 0.01% of SpaceX, and on the New York Stock Exchange, they're effectively getting a value for that, a valuation of $173 million. Okay, now given that they only own 0.01% of SpaceX, what valuation would SpaceX need to achieve to close that NAV premium, right? So what valuation would SpaceX have to achieve such that DXYZ's stake grows into its current valuation of $173 million? Well, if you just divide those two numbers, you take $173 million divided by 0.01, you get approximately $1.6 trillion. So SpaceX's valuation would need to increase to $1.6 trillion just for DXYZ to basically to close the gap between DXYZ's market price and its NAV. Another way of saying that is if you invest in DXYZ today as an indirect way of investing in SpaceX, you are effectively investing into SpaceX at a valuation of $1.6 trillion when SpaceX's current private market valuation is only $350 billion. So you need to understand that, right? If you are investing in DXYZ, you're investing in SpaceX at a massively inflated valuation. Now, will SpaceX ever achieve a $1.6 trillion valuation? Well, I mean, anything is possible, but according to media reports, it is estimated that in 2024, SpaceX had generated revenue of $13 billion. So that is tiny compared to this implied valuation, right? So the implied valuation is $1.6 trillion, and they made $13 billion of revenue. So that's a valuation of more than 100 times revenue, which is obviously insane. And then you also have to consider that if you are investing in DXYZ, you're also incurring massive management fees. So technically, their management fee is only, I think, 2.5%. DXYZ charges a management fee of 2.5%. However, they also invest in, so a lot of the private stakes that they own, they don't invest directly into these private companies. They will invest into third-party funds that are managed by somebody else, who in turn invest in the private company. So that adds a second layer of fees for a lot of DXYZ's position. So once you include all those secondary fees as well, the total management fee increases up to 5%. So if you invest in DXYZ, you are investing in primarily into SpaceX at a massively bloated valuation, and you have to pay 5% fees on top of that over time. And then the whole narrative that, oh, SpaceX is going to benefit so much from Trump, well, that might be possible, but Trump is only going to be in office for a 4-year term. So what happens at the end of 4 years if there's a new administration that is no longer friendly to Elon Musk and would no longer give SpaceX favorable contracts? Well, yeah, they might get some benefit in the short term from Trump, but their revenue is only $13 billion. Even if their revenue could double, this is still nothing compared to the 1.6 trillion implied valuation. So there's really no logical way to justify that investing in DXYZ could be a good idea. Even if you believe in SpaceX and you think SpaceX is going to be successful, the premium to NAV is so great that it just doesn't make any sense that this is ever gonna work out in the long run. So with that being said, that wraps it up for everything we had to talk about DXYZ today. So we will see you all on next week's video.